Good morning and welcome back to Almus Market Mornings. While US stocks posted their best session in over 2 weeks, attention remains elsewhere. Japan's bond market stays in focus ahead of today's key 40-year auction, coming at a time when the long end yields remain volatile and demand remains uncertain. Meanwhile, an interesting shift is underway in China. The PBOC, after months of propping up the yuan, is now working to prevent rapid appreciation. The central bank has been setting the yuan's daily fixing at a slightly weaker than expected levels, reflecting growing sensitivity to dollar weakness and its impact on Chinese exports. JK, with the PBOC trying to cap yuan gains, how do you relate that to the rupee's moves?
Good morning, Swaraj. I have been observing the PBOC's moves daily, and I think they are, in general, keeping the yuan stable in line with the overall dollar movement. So yesterday we had dollar index gaining a bit, and accordingly the yuan fixing also had been on the weaker side. And I'm not seeing a particular bias for either to strengthen or to weaken the yuan. I mean, as per many times the statement that we have heard from Chinese authorities, they want to keep the yuan exchange rate essentially stable. I feel if the dollar index falls, substantially from these levels, the yuan will also follow the course. I don't think there will be any, different move in the yuan from other currencies, uh, because that would only further worsen the trade, the trade relations between US and China. Apart from that, yesterday the big market news was, of course, the Japanese, decision on issuance of their long-term bonds, adjusting their, debt plan. So basically, they have, announced plans to consider reducing issuance of super long-term Japanese government bonds, specifically with the maturities of 20, 30, and 40 years. And the intention is to reduce upward pressure on the yields. Recently, we had seen uh, a rise in the Japanese yield substantially, and that also happened even as the US yields were rising. This all leading to the rise in borrowing costs for businesses and the individuals. So this had been on the cards, and that's what they decided, and that had a good impact on the market, bringing down the yields both in Japan and the US, where the biggest rises were seen. US 30-year fell by almost 10 basis points, and the Japanese 10-year and 30-year also yields were falling. Of course, there have been similar moves by other governments also in UK. They have been steering away from longer bonds given the falling investor demand for long-term bonds. Yes, the yields were lower yesterday, but whether the impact will last because of the reduced long-term bond supply is something that we have to wait and see. I'm quite skeptical about it. Market's larger concern is the huge deficit and debt pile of the US government that translates into lower demand for longer dated paper and thus higher yields. So the trend in higher yields can only be addressed sustainably with a big policy move by the US government, either to cut their expenditure and reduce the deficit, or by the Fed eventually deciding to buy the US treasuries when the yield goes beyond a certain point. So this is an interim move, some relief. Other thing that you also pointed out is the big rally in the stock market in the US, and this was, something that was building up since late last Friday. Friday, we had seen the US market fall after Trump had announced a 50% tariff on the European, export to US. Then, of course, we had a holiday on Monday in the US and in the UK. Yesterday, combined with the Japanese decision on, the issue, lesser issuance of long-term bonds that led to fall in the yields, and the market also looking at the fact that Trump had reversed his decision to impose 50% tariff on US goods, not reversing, but actually postponing it to July 9th, along with the other countries, was resulting in a very big relief rally for the US stocks. Of course, we are. I don't know whether the current rally, which has taken the S&P 500 to within 5% of its all-time closing high, is once again justified, because the valuation concerns continue to remain. The doubts about US economy after the imposition of tariffs also remain, even as we see a continued slowdown in many sectors, evidence of which yesterday was seen in the durable goods orders that saw a substantial fall in the non-defense and non-year-based capital goods. There is skepticism among the business people to invest more, even as they face uncertainties from the US government policies. So uh, I'm not sure whether the stock market rally is start of a new uptrend, uh, but yes, we will have to wait and see the data in the coming days on US GDP, as well as on the PC core inflation, apart from how Fed reacts to these numbers. I think yesterday these two combined rally of the stocks and the bonds actually resulted in dollar also gaining. So we have been seeing dollar steadily losing ground in the last couple of months. Based on the fact that US may be pushing for a weaker dollar, then the increasing concerns about US deficits and the debt pile, apart from the expectation that the tariff could eventually lead to higher inflation and lower growth in the US. All these things have been uh, leading to a lower dollar, and these factors have not gone away. These factors are very much in play, but the market has been positioned quite a bit. So maybe a bit more in the short term, which is what is getting unwound. So a bit of demand for US assets yesterday, and also perhaps the month-end squaring up of positions led to the dollar demand. Uh, Technically, dollar index has found good support in the 98, 99 region. So we have bounced to 99 and a half. The bounce can carry a bit further towards 100 or 100.5, which means that euro can probably test 1.12 and GBP at 1.34. None of these changes the underlying trend of the dollar, which is going to be down. But perhaps we will wait for some fresh triggers some policy moves before we get into the next phase of the dollar's decline. As far as the rupee was concerned, we have been observing that the volatility in the rupee, or the range in the rupee on a daily basis, has been expanding for quite some time now, since January this year. This is definitely a change that has happened after the new regime in the central bank. uh, Moves are led by flows, and when the moves are led by flows, the central bank is not intervening in with at every frequent intervals. They are only entering when they feel that the moves have been excessive, or it is going against the fundamentals, or if there is a speculative move. So with those parameters in mind, we are seeing big swings in the dollar rupee, and that this is what we have seen this last week and this week also. We had seen large outflows taking the dollar to 86.05 on Friday. And since then, large inflows have also brought it down from 86.05 to 84.80 within two trading sessions. And since then, we have seen importers seizing on the downward move in the dollar to hedge themselves. And there are talks about some repatriation once again. Month-end demand also resurfacing. Dollar index recovery also having some influence. So nothing to write as no fresh bull trend or a fresh bear trend. We are within the 84, 86 broad range, but the flows are actually governing the rupee movements, and this is likely to continue until we see next big move in the dollar index. As I stated earlier, dollar index itself has been in a consolidation mode, so I don't think there is any reason to think that rupee will have a new directional weakening or a strengthening trend. But definitely the ranges will be wider, as we have seen in the recent past, because of the fresh approach by the RBI. For the day, of course, I expect the dollar rupee to be contained at 85 on the downside and perhaps 85.60 on the upside. Thank you.
Thank you, Rick. And I think the key things today would be the Japan's issuance. At the same time, we discussed about the big rally in US stocks. Of course, it was built up over the last week after the postponement of the EU tariff, and in general, the US stocks were quite sold off. So it was more of a relief rally, a very strong relief rally. On the data front, we had the durable goods order, which saw a substantial fall in the capital goods. The US dollar itself has been having a relief rally as the sell US theme gathers space. The month end is approaching, and that could be supportive of the dollar's recent support. For the rupee, as JK mentioned, the daily range has been expanding. The central bank intervention has been limited, and the swings are more driven by the flows. That's it from us today. Thanks for listening. Tune in tomorrow for the latest on the financial markets.